Get ready to embark on an economic journey as we unveil the heartbeats of the Rwandan business landscape. This is the Business Age, your front row seat to the economic renaissance of the land of 1,000 hills. Join us as we traverse the bustling markets of Kigali, delve into the success stories of Rwandan entrepreneurs, and explore the dynamic forces shaping the nation's economy. From the boardrooms to the street vendors, we'll bring you the voices of the visionaries and the minds behind Rwanda's economic evolution. Discover the fusion of tradition and technology, witness the agricultural innovations transforming rural communities, and explore the cutting-edge innovations propelling Rwanda into a new era of economic prosperity. From the city lights to the rural landscapes, every business is a story waiting to be told. Hello there. Thank you so much for tuning in to today's episode of The Business Age. On this particular episode, we'll look at how renewable energy here within the African continent is a critical pathway to climate resilience and economic growth as well. You will be with me, Naringwa Fiana-Motoni. Africa's population is projected to nearly double by 2050. Creating both challenges and opportunities in the energy sector.
The African continent has been blessed with a lot of natural resources. In terms of solar, we are probably the leading region in the world. In terms of hydro as well, we have a lot of resources. One example is the Inga project in the Democratic Republic of Congo, which is assumed to be a 45 gigawatt potential hydro resource that could actually power the whole of the Southern African region and also power the whole of the DRC. And this is just one of many. In terms of solar, all the countries in the Sahara region are able to actually electrify the whole world if we were to put panels on top of that. So the potential is massive. What we've not been able to do is to harness it quick enough, to put up projects quickly, put up the interconnectors quickly so that we can share this power and ensure that we can actually use that power to bring economic development, which is really needed in the continent.
Energy is crucial for economic growth. We spoke to government representatives from the Ministry of Energy in Rwanda and Sierra Leone on the current energy state in their respective countries.
The energy is the driver of the economy. When you look at the energy consumption rate per year, it correlates exactly with the GDP of any country, meaning that the energy is a key contributor to the economic development of any country. So meaning that when there is energy, it is easy to attract investors. And it is easy to make a business. Small-scale industries, you can promote them when you have enough power, enough energy. So it is our expectation that as we grow in terms of energy, resources, and generation capacity, it will help population to create jobs, to have small-scale industries, and to boost their economy. For the energy access, we are at 80%, 57% on a grid, and 23% off-grid. We can compare these figures with the figures we had in 30 years ago. That 30 years ago, access to electricity was around 1%, maybe between 1% and 3%. In 2010, access to electricity was 10%. So to show you that in the past 30 years, the Rwandan government has invested a lot of money in order to have access to electricity for the population. For renewable energy current in our energy mix, it contributes like 52%. But the target is that by 2030, the renewable energy would contribute 60% in our energy mix.
The energy mix right now is around 30%, 35% renewables. So we have some way to go from where we want to be, where we've targeted to be 60% renewable energies by 2030. So there are several programs that we're exploring or that we're developing that will get us there. One big program is our mini grids. We've constructed 100 mini grids in rural communities, and from now till 2028 we have a target to construct 200 more. So the push for rural electrification, where that's the majority of our people, that's where they live. So we're pushing to get electricity to them through solar mini grids, and then doing work on transmission to interconnect the grids, the solar mini grids, and also connect the solar mini grids to the main grid in the capital city, Freetown. Where we are is in a very positive position. So Sierra Leone has managed to secure the Millennium Challenge Corporation's compact, which will be $490 million that will go into the energy sector in order to fix some of the gaps that I was referring to, the transmission lines, to start doing interconnection between the cities and also of the mini grids. So we've attracted significant amounts of institutional capital that has put us on this platform to get to where we want to be. So aside from the MCC compacts, we've also attracted funding from DFC, that's another $412 million. And we have the World Bank that's been working closely with us with another $100 million. So about $1 billion of investments going into the Sierra Leone energy sector in the next 5 to 7 years. So we see ourselves on a really positive trajectory to get there. Other steps that we're taking to accelerate our progress are the policy steps. So we just recently signed a new framework agreement with our solar mini grid operators. So all of our mini grids are operated by the private sector. So we're trying to encourage the private sector as much as possible to come work with governments so we can move a lot more faster to achieve our goals.
We need to unlock this potential. What tools or where can we start off from now to just leapfrog and be able to unlock this?
Yeah. So I think normally everything starts with the government, where I think we want the championship of these missions to be. And the government, they appreciate that they need to create the necessary policy and regulatory frameworks. This is meant to attract investors, to attract the private sector, and also to ensure that there's a good balance of the systems that are being set up. Secondly, I think in terms of the tools, what we need is innovative financial instruments. So the existing financial instruments have shown that they cannot work at the scale that we require, which is the normal debt that countries take from the MDBs. Now we need to make sure that we can blend that debt with philanthropic capital, with private capital, so that we can ensure that the projects have a more diversified risk and that they can move forward quickly, because we are all aware that a lot of the money rests in the private sector, but we've not been tapping it to the level that we need to. And I think the final one is viable business models. So Africa as a continent has been trying to look at models that have worked in the West, but unfortunately our conditions are a bit different. So looking into business models that work for us. And this means initiatives such as the Continental Master Plan or the Africa Single Electricity Market come into play, where if a country is already developing its resources, for example, the same DRC example, then countries that are near the DRC do not need to also develop new sites. They can leverage what is coming online, share that power within countries, and that allows us to actually, as a region, develop our power plants, develop our electricity markets in a way that we are sort of sharing and leveraging each other's strengths, that allows other countries which do not need to be developing at this time to use those resources for economic development, and then they are able to actually get the capital that is required to build the plants. So I think there are a couple of tools, but just to summarize them is that regulatory framework, innovative financing, and also business models that are fit for purpose.
Africa faces a huge financing deficit in the energy transition. We spoke to the International Renewable Energy Agency on this.
Invest in Africa 40 times less that's per capita than in other parts of the world. So the gap is huge. Naturally, infrastructure are needed because, private company invest if they can sell the energy and if there is someone that is going to pay for it. Today, the only chance is to go through PPA. So at the end, the tariff will be paid by the government. And this will shrink the fiscal space. You have been listening this morning as the minister said that there is no fiscal space to support more investment on renewables. So it's important that the infrastructure is there, because if the infrastructure is there, first of all, building the infrastructure, we create jobs, we create value, we create GDP. So we create demand, capacity to pay, and also we can allow companies to plug their energy into the grids and trying to have a revenue, because at the end, if you want the private money to come and invest, they have to have a kind of insurance they can have a profit.
It's a journey. It really is a journey. Recently, some of our private sector partners needed a financial subsidy or an injection of cash due to foreign exchange losses on their operations over time. So we as government are trying to be as responsive as possible, so that in areas where there are pain points, where private sector needs public money or public influence to address those pain points, we're trying to be as responsive as possible. It's not perfect, but things that we've put in place, things like tax waivers, things like the interministerial infrastructure group, where we're making sure that across the energy or across the government value chain for energy, we're all synchronized. All across the value chain, we're making sure that everyone's involved and that no public sector entity becomes a bottleneck for our private sector partners.
They require huge financial resources that we have to mobilize through development partners, through the national treasury. So that is one of the challenges. Another challenge is that it requires experts, engineers, and different consultants, the capacity that sometimes we need from outside. So challenges are there, but also we have the commitment to bridge this gap, because renewable energies, they are somehow contributing to mitigate climate change issues.
Integrating renewable energy sources into the existing infrastructure comes with unique challenges and requires innovation at every level. How easy or how seamless has it been integrating renewable energy sources into the existing energy systems?
Yeah, so it's definitely is a big opportunity, but there are some challenges that come with integrating variable renewables into the grid. And in this case, most of the renewables that we are looking at are solar and wind on the intermittent side, but also hydro and geothermal for countries where the resource is still available. And I think the biggest challenge, the biggest two challenges are, number one is the frameworks that we have were not built with this integration in mind, and integration at a large scale. And governments are trying to adapt to this, but it's taking more time than it should. So a lot of viable and solicited projects that could otherwise be in development or in construction are taking a very long time because of bottlenecks within the approval process, within fitting them and designing and modeling them to fit into the grid that we have currently. Secondly, the current state of our grid, some countries have aging infrastructure. We don't have the right type of technology, so Internet of Things, to create the ability to be able to interact between the traditional grid and the newer variable sources of energy like solar, where you need to balance the amount of solar coming in, the amount of grid stability that is needed. So this tied to the grid instability that renewables could bring, I think is still a big challenge. But there are solutions to all these challenges. In terms of the grid stability, there is batteries on the grid that could be installed. And as GEAP, we have funded a pilot project in Malawi where we're installing 20 megawatts on the grid. It will allow for about 100 megawatts of variable renewable energy from solar. And this is a model that can work in the national grid of Malawi, but also in the regional grids, the Southern African Power Pool, Eastern African Power Pool, where one battery can actually be shared across a host of countries. And once they use it to create stability in their grids, then it creates the right enabling environment for private sector to actually develop variable renewable energy systems and plug them into the grid. One of the other things that has been very useful is the declining cost of renewables. So, some years ago, we needed to think about how to fill in the gap, the viability gap. But I think last 10 years, we've seen considerable decrease in the cost of solar panels, in the cost of batteries. And if this trend continues, I think we are hitting an inflection point where renewable energy is actually cheaper than the traditional forms of energy, making it a no-brainer in terms of deciding what to go with. All we need to do is to ensure that our grids are ready to take on the new renewable energy sources, and also ensure that the government has put in the right frameworks to allow for more investment of this.
When it comes to financing this renewable transition, there's already a huge finance gap. But then we're also now talking about tapping into the emerging technologies as well. That also requires a heavy investment. So then how do we balance the need for investment and the emerging technologies?
Yeah, so I do think that Africa has some resources that remain untapped. And this is maybe one source of finance that we've not been harnessing as much. So our natural resources, like our critical minerals that we have, this could be our way of actually being able to bring the right technology for embedding onto our grids. The second one is obviously the carbon markets and the carbon credit potential that we have. Again, if we are able to structure this correctly and have them as our sovereign guarantees, or in addition to our sovereign guarantees, then we are able to bring in more capital and reduce the risk that is mostly perceived in the continent, and that will allow us to attract even more money. I think when it comes to new technologies, our opinion as GEAP has always been to use proven technologies, because countries do not have a lot of financial headroom to test new technologies. We use the proven technologies that have shown they can work, that they are bringing the right value to the continent in terms of economics, and finally that are able to actually integrate technologically with what we have right now. So there's solar and battery, hydro, which is a little bit more legacy, but I think coming into the spectrum is green hydrogen, long duration storage, and all those new technologies. But our opinion has been that the continent should continue to work with what has been proven before getting into new technologies. Obviously, because of the investment gap that you've talked about. But something else I wanted to touch on is, anytime we speak with investors, particularly the private ones, what their concern is, apart from the perceived risk, is that we do not have quality pipeline of projects, and the projects that that are put in front of them are not to the quality they require. And the project developers as well say the same thing, that we do not have enough financing. So partly I would say the gap is actually a perceived gap. It doesn't really exist. If we can match the risk and reward, maybe we can unlock a lot of the financing that is already there but is not coming into the continent. What it means is putting a lot of effort into project development so that we can really push the quality of projects very high, reduce the time lag of developing projects, because that's also another step where a lot of financing that would have otherwise been used for developing a project goes into paying salaries and all these things. So I think from where I sit, we do have enough money. We do have enough money to start the flywheel, and we do know where the other sources are to keep the flywheel actually moving. All we need to do is to work on that pipeline quality, work on the framework again, as I said, and ensure that we show and demonstrate results to the world that actually Africa could have taken these projects, and the perceived risks are actually not true. They do not exist in the continent.
And the rate of risks or risk perception, if we may say, how have you seen it playing out within the space, and to what extreme?
The risk perception for Sierra Leone specifically is still high for private institutional finance. So this capital that I was referring to is all public money, where their risk tolerance is a bit higher than private money. But we are looking at different instruments that we can bring to de-risk the markets. We are researching the development of the Sierra Leone Energy Fund that will exist to provide some guarantee instruments, underwriting instruments where the government can't offer sovereign guarantees. We're also trying to understand how we can use our carbon credits to create a forex processing window to address some of these issues that we now know exist around getting access to forex or losses due to depreciation. There's a lot of work to be done, but we're taking the steps that we can now, and we think that we are on a good trajectory to get to where we want to get to.
We are at a time where we are reducing the carbon emissions. So then how do you strike a balance between the two, between investing in these renewable sources and also trying to bring down the carbon emissions?
It's complicated, especially given the fact that our people, Sierra Leone is a low-income country. In order for us to get to middle income, high income, we have to industrialize. Industrialization, even in the West, is largely based on having a stable base load of power. And you look at a lot of the energy mix of advanced or developed countries, there's still a significant percentage of their energy mix that they're getting from hydrocarbons and nuclear. So this isn't lost on us. The balance is us trying to understand where we can green our energy mix while still being able to improve our economy and the lives of our people. Some instruments that we can use to help us get there. The West Africa Power Pool is a power pool that connects several countries across the region. So sometimes the simplest approach is to see what you can import from your neighbors, which saves you the time in trying to develop transactions to get generation in. But also we can take advantage of some of our neighbors' hydro power dams. We can take advantage of some of our neighbors' geothermal, some of our neighbors' solar, whilst we're still developing our own nascent energy sector. So we have 200 hydropower potential sites. We've only developed 3 so far. So we're really looking to go big on hydropower over the next 20 years. That's not going to be easy. Hydropower projects do take longer to execute than solar power projects. They're also a lot more expensive. They also have a lot more complex environmental and social impact assessments, dynamics that you have to deal with. But we need to develop these assets because Sierra Leone is also blessed with a lot of raw mineral resources, but we are instituting a policy now that mining companies that come into the country have to process in country, but no one is going to be able to process without energy. So unlocking these large volumes of energy will be able to go hand in hand with our policy prescriptions of saying, no, you have to process here. But then the mining company will say, well, there's not enough energy for us to do that. So government is trying to make sure that as we're giving policy directives in one sector, that the other sector that needs to support it is there to support it.
To bridge the gap, Investments in installing capacity are needed to lay the groundwork for sustained growth. Yet, the continent only receives about 1.6% of the global investments.
This installing capacity is mainly concentrated in US, Europe, China, and Africa is left behind. In the last 2 decades, only 1.6% of investment went to Africa. Last year, 2 billion of investment. So this is largely, let's say, we can say it's not fair. It's not working for the energy transition. Here we have to install 40 times more per capita if we compare with other countries. So we really to make an effort to have Africa be driving the energy transition worldwide. Generally speaking, we say that for accelerating the energy transition in general, but this applies very much to Africa, is we have to overcome the barriers that make us not be fast enough. The first barrier that we have identified as arena is the infrastructure. So we need grids, pipeline that are interconnected. They are flexible and balanced. So we need the infrastructure that fit with a decentralized energy system. We need a market that is designed for renewables. The market today is designed for fossil fuels. Look at the subsidies, but also in the way the price is fixed in the market. We need long-term contracts because renewables have a very high upfront cost and low cost in maintenance periods. So, and also we need to overcome the lack of capabilities. So we need institutions that may be able to manage the decentralized energy system, so they have to be strengthened. And we also need professional and workforce that can be fitting with the new energy system that is coming. So these are the barriers that, generally speaking, that we need to overcome. And we have also to find concrete way to rewrite the way the international cooperation work. Because as we have seen, we assisted, is not working well enough to put Africa on the spot in an equal foot with the other part of the world.
To ensure that these investments have lasting impact, Africa must prioritize sustainable and inclusive growth. By investing in clean energy, efficient infrastructure, and local industries, African nations can build a future that benefits all citizens. Thank you so much for tuning in to today's episode of The Business Age. You are with me, Maringwa Fiona Muthani.